Let's talk about another industry powerhouse in that area, WPP Group. It's the global advertising and public relations firm. The company's CEO, Sir Martin Sorrell, is standing by live at the Chicago Business Council with Bloomberg's Lisa Murphy. Lisa?
Julie, thanks so much. I'm here with Sir Martin Sorrell. As you said, I'm pronouncing
on your second day.
On my second day, and I don't want to mispronounce your name.
I'm not going to be deeply offended. I've been putting out for 65 years.
All right, so it's Sorrell. We've straightened that out for the record.
Yeah,
okay.
That's fine.
Let's talk about the stock, WPP.
Right.
It took a little bit of a tumble back in August. You had mentioned at the time.
Not that much of a tumble. Not
that much. There's a 3.6%. We don't want to make it. We don't want to blow it out of proportion. But certainly you've recovered since then, and now WPP is at a 52-week high.
Right.
Analysts, by and large, the majority seem very bullish on the stock. Yet here at the Business Council, many CEOs seem to be a little less optimistic than they were 6 months ago.
That may be because we got closer to December the 31st, and most of them are on calendar budget years. So it may be that they're facing reality. One of the interesting things is many of the companies, and I was in Shanghai for Mayor Han, he's the mayor of Shanghai, for his International Business Advisory Councils. He had about 50, 55 CEOs from international companies, Chinese and non-Chinese as well. What was interesting is people still complain of significant uncertainty. So we're closer. Most of them are on annual budget years, calendar year budget years. So we're close to that point in time. When I looked at the Business Council's statistics, quite interesting actually, there was a little bit of feathering of increase in uncertainty, but the central issue is this issue about uncertainty, and most of the clients are on annual calendar years, and I think that's the problem. So when I look at our business, everything in the rearview mirror, including September, which we report, we're in Purda, or meant to be in Purda, so I may get shot for doing this, but we announced our results for the Q3, our top-line revenue growth, like-for-like revenue growth at the end of October. But everything that we see in the rearview mirror has been pretty strong. In fact, by the end of September, we've really achieved the objective that most analysts are sort of pointing to of 4%. We're in excess of 4% by the end of like-for-like, by the end of September. And to put it in perspective, we were budgeting 0 growth. So we upped it at Q1 to 2, we upped it at Q2 to 4. This is for the year. So at the end of Q3, we're over 4. So we've done much better than we anticipated. And the other interesting point is if I look at Q3 on its own, we're really back to where we were in 2008, top line, and number of people in the company is less. Now, so there's been, in theory, a productivity gain, although I would argue that most business, including our own, have just been adjusting headcount, cutting headcount. Whether it's a true productivity gain in the real economic sense of it or not. But basically, we're doing the same volumes in Q3 that we did in Q3 2008, in 2010, with less people.
Well, let's drill down into that a little bit. When I looked at the mix of your product segmentation from 2005 to 2009, your revenue mix at the end of 2005 was the majority, it was over 80%, was what I think you would call traditional advertising or traditional media. Now, when we look at what your revenue mix was at the end of 2009, it's a third of that. Do you ever see that going back, and what's making up the difference now?
Well, what's interesting about the first 9 months is we described at the end of our first half as America biting back and traditional media biting back. Whereas the growth segments, I mean, our strategy is what we call NM squared CI, which is new markets, new media.
That's easy to remember, not so much. But
new markets, new media, and consumer insight, which is easy to remember. And there are sort of 3 or 4 things going on. Firstly, it's the BRICS and Next 11. I just came back from China, as I said. So the BRICS and the Next 11 are already 28% of our business. Our target's to be a third of our business. New media is also around 28% of our business, target to be 1/3 of our business. Consumer insight is where it should be at about 26, 27% of our business. There's a sort of 4th thing going on which is interesting, is that relationships with the media owners on our side, we buy about $65, $70, $75 billion of media around the world. Our revenue is about $14 billion. We account for about 25, 30% of most media markets in China. We're up at about 15%, significantly bigger than anybody else in the market, both local and multinational. That relationship with the media owners is becoming more important. And we just appointed Li Rugang, who's the chief executive of Shanghai Media Group, the 2nd biggest media group in China after CCTV, to our board as a non-executive director. So those relationships with the traditional media, the big events, like we're just doing for Procter & Gamble in China, China's Got Talent. So 500 million people are watching that show.
China's Got Talent. Sir Martin Sorrell, we're going to stop on that note. Thank you so much.
We could go on for a long time.
I know, China's Got Talent.
Even though you mispronounced my name.
To be continued. I'll stay tuned. All right, Julie, Mark, back to you. Thanks so much.
Thank you.
Thank you so much, Lisa, and Sir Martin Sorrell of WPP.